and welcome. Good morning, everyone, and welcome to the IEA Africa University. My name is Rita Madeira, and I'm an Africa Program Officer at the IEA. I'm very happy to have you today in this session of the IEA Africa University, and I have the pleasure of having with me my colleague, Trevor Criswell from the Renewable Energy Division, who will walk us through the updates on the renewable energy market from until May 2022. Before I hand over to Trevor, I would like to set the scene and give you a bit more context, and also while we wait for additional participants to join us. This webinar is organized by the IEA as part of the IEA Africa University initiative. As most of you might know, the IEA, or the International Energy Agency, is an intergovernmental institution that is at the heart of the global energy dialogue and is increasingly focusing on transitions to a clean energy future. We have been operating for nearly 50 years, and we are based in Paris with a little over 300 staff. Our agency covers all fuels and all technologies, and we provide unbiased data, policy advice, and support implementation towards secure, affordable, and sustainable energy systems globally and in Africa. These three areas of activities, so data collection is obviously a core area of activity for us. So we work with the countries and partner institutions to collect data that will feed into the analytical work that we do. The IEA also offers policy advice to governments and convenes high-level fora and other initiatives to gather stakeholders who can then discuss key priorities for the continent and global energy questions in today's world. Thirdly, we support implementation of these activities through a range of initiatives, for example, this one, and also with support from the European Union, we implement a capacity reinforcement program on energy statistics and modeling for 10 sub-Saharan African countries. These initiatives developed through country-by-country training, and because of pandemic restrictions, these have been mostly conducted online. However, this year, we're very happy that we will start rolling out the in-person training of tailor-made capacity building initiatives for each country and region. We also have a broad community of African energy experts with whom we interact and engage with through peer-to-peer activities and knowledge sharing and engagement. We also do bilateral work on energy data improvement and modeling practices. This community is quite active, and we have WhatsApp groups and LinkedIn groups. If you're not yet a part of those groups, feel free to join us and we will be happy to welcome you. Before I hand over to Trevor, I would just like to provide some broad strokes of the trends that we'll be discussing in more detail shortly. We know that through our data and analysis that despite persistent pandemic-induced supply chain challenges, logistical difficulties, and obviously the high prices of raw materials and commodities, renewable capacity additions broke another record in 2021. And Trevor will show this in more detail through data and some illustration. We also know that high energy prices are posing difficulties around the world, and particularly in sub-Saharan Africa. Renewable energy has long held the potential, especially since the fall in its prices, to reduce energy prices and dependence on fossil fuels. In the African context, we also know that solar PV and wind projects are typically less difficult to finance and to implement, and also have shorter construction times and are therefore a very good solution for increasing electrification and to reduce prices of electricity. Today, we'll be asking mainly two questions against this backdrop. Will renewable energy sources defy this global energy crisis and continue to expand as they've been doing recently, despite the current political and macroeconomic challenges? And secondly, will demand growth in biofuels resume at historical rates, especially given its current high prices? To answer these questions and walk us through IEA's work on this analytical piece, I'm happy to hand over to my colleague, Trevor. Trevor, over to you.
Rita, thank you very much. I'm going to share my screen here real quick. 1 second. Yes, Rita, thank you very much. And thank you to everyone this morning for joining us this morning. I'm very happy to be presenting to you the findings of the Renewable Energy Market Report update, which was released in May this year. So just a couple of quick notes. We've released 2 reports a year. Our main report is released in the fall, and then we release a market update every May, which is what we will be discussing today. So Renewables 2021 was released in December of 2021, whereas this May update provides an update to that report. A quick note on the timelines as well. Our major publication, Renewables 2021, does a 5-year outlook, while these market updates do a 2-year outlook. So the timeframes and timescales that are represented in this update will be to 2023, and all of the numbers that we will be discussing reflect that. So as we move into the presentation, we're going to be talking about trends and drivers for renewable growth across electricity and then across biofuels as well. So we'll be looking at markets and technologies in the immediate term, as well as the intermediate term. As I said, we will start first with electricity, and discuss sub-Saharan Africa at the end of the section, and then we'll move to biofuels before we move into questions. With that, we'll get started with electricity. Now, it's important to note as we discuss the resilience of renewables that we have seen over the past few years. If we look back to 2019, renewable capacity additions reached almost 200 gigawatts, led by solar, PV, and wind. Now, as the coronavirus pandemic took hold across the world, people were concerned that there was going to be a regression of those capacity additions in 2020. But actually, what we saw was a resilience of renewables. In fact, setting a then record of over 250 gigawatts of capacity additions led by PV and a record year of wind additions due to policy deadlines in China and in the United States. When I say then record, I mean it's because 2022 we saw even higher growth. In fact, we almost added, as the world almost added about 300 gigawatts of renewable energy capacity, which is about 6% higher than what we saw in 2021. Now, I'll get into the details about technologies a little later, but you can see that certain technologies are driving these additions, particularly PV and wind. Now, wind did not reach the record year that we saw in 2020, but still provided strong growth in 2021. In terms of our renewables 2024 forecast, which we provided this update for, we were fairly accurate, underestimating PV, overestimating wind, but kind of right in the ballpark of where we ended up in 2021 for capacity additions. So let's take a look at some of the technologies that are going to be driving these additions as we move forward. Let's start in the wind sector. We'll start with onshore wind, which is the largest segment of this market. And what we can see, as mentioned, a Chinese policy deadline and American policy deadline contributed to a record year in 2020. Well, we won't be seeing that record year in 2021 or in 2022. However, if you add in the offshore component, we are starting to see higher shares of offshore wind contributing to overall wind development. Now, 2021 was a particularly strong year for wind additions, again, due to a policy deadline in China, but it leads to a broader diversification of the offshore wind market, which we will discuss later in this presentation. So while 2021 and 2022 won't match those additions seen in 2020, what we can see is that those additions this year and last year are nearly double those seen in 2017, 2018, and 2019. Shifting segments, we'll be moving into PV. For this presentation, we've split this into 2 segments. One is the utility scale segment, which I'll be discussing first, and the second is the distributed segment. PV utility, the utility scale PV helps make up for some of the lack of wind that we're seeing in 2022, and this is due to previously awarded auction capacity. These are projects that won auctions in 2019, 2020, or 2021, needing to connect before deadlines. We're also seeing a high share of corporate PPAs linked to solar projects, which independent power producers can work with corporations to sign bilateral agreements for the sale and offtake of that power. So that's why we're seeing some of the reasons we are seeing such a high amount of utility scale PV, especially in 2022. We're also seeing strong growth in the distributed segment as well. And this is due to policies that are enabling consumers and companies to be able to install these systems. And we're seeing an emerging trend, especially in a time of high energy prices, where consumers and businesses are starting to take advantage of policy benefits, such as feed-in tariffs or net metering, that allows them to lower their costs in the face of these high energy prices. And at the very end of this slide, I'm going to discuss a little bit of solar PV as a whole, their contributions to capacity additions overall, because it is quite substantial. Moving on to hydro. Hydro had a strong year of growth in 2021, and we will continue to see that strong growth in 2022. And these are due to large projects coming online in China, Latin America, and Africa as well. Bioenergy and other renewables, such as geothermal or ocean technologies, see a smaller share of the growth, but bioenergy and those other technologies combined with hydro present a very, very good technologies as they are dispatchable. Renewable technologies and can be paired with variable renewable technologies such as wind and solar PV to provide system balancing as we increase the amount of renewables in the system. Now, as I said, I wanted to touch on very briefly PV's share. PV's share of total capacity additions is once again growing. There was a small dip in 2020. This is mainly due to the record year of wind additions, but we see it having an increasing amount of shares, nearly 60% in 2022, even in the face of higher commodity and logistics prices, which is something we will discuss later. Now, obviously, since our update we published in December, things have changed. And as a result, our forecast has been revised as needed. We'll start with the upward revisions. And we'll start in China, as there's been a push at the provincial level for more renewables and more renewable capacity. And as a result, we have increased our capacity projection. Moving on to Latin America, a strong market for distributed PV in Brazil due to strong net metering laws. See increasing amounts of PV, especially this year, given that there is a phase out of that net metering program beginning next year. This growth in Latin America is supplemented by projects in Argentina and Chile and Colombia. The EU is also seeing higher shares of PV through policy and rooftop, leading to a revision up. Now, it is important to note that this forecast did not take into account the Repower Europe program that was released recently, and we anticipate more changes to our forecast in the fall as we incorporate the Repower Europe plan into our forecasts. Moving to the downward revisions, we will first start in Japan, where Japan is seeing lower additions due to lower feed-in tariff approvals for solar PV. As a result, we've revised down our forecast. Of note in Japan as well, there was a new feed-in premium or FIP program that just went into place in April. So we'll be monitoring that to see what the demand like and investment like is as a result of that policy in that market. Moving to the United States, which saw our largest revision down, there are two challenges facing that market. The first is long-term policy uncertainty. Wind and solar PV have historically had two incentives. One is the investment tax credit, the other is the production tax credit. Those policies lapsed at the end of last year and have yet to receive any sort of renewal. As a result, developers are waiting to see if these policies will be renewed, and as a result, there could be decreased capacity additions. The second challenge facing the United States are trade barriers. There is currently a anti-tariff circumvention petition being reviewed by the US Department of Commerce, which would impact the amount of solar modules that would be allowed to be imported into the United States from Southeast Asian nations, and as a result, would potentially limit the amount of solar PV available to be installed within that market. So again, a lot of things have changed since December, and we are actively monitoring these developments in each market around the world to ensure that we're accurately reflecting the current market conditions. There could be more developments as we move forward, and those will also be reflected in our Renewables 2022, which is expected to be released in the fall. So now that we've discussed some of the technology level growth, we've discussed some of the revisions and current market conditions that we've seen, really want to discuss which markets are driving this growth. And we can't start anywhere without discussing China, as China has the largest amount of renewable capacity additions. In fact, it's 45% of the total global growth. And it's in line with those 2030 targets that the country has set. So we anticipate that growth to remain as high as we have seen in previous years. Moving to markets outside of China, Europe represents a strong growth market due to policy targets, and these are current individual country level policy targets, and also as previously awarded auctions and net metering. Now, as I mentioned, this could be revised to the Repower Europe program, but another piece that we were monitoring are individual country level policies and targets that have been evolving as the year has gone on. For example, Portugal had a 2035 renewable energy capacity target that they have moved forward to 2030, where Germany has revised their 2030 targets in, I believe, April, so increasing those targets. So as individual countries continue to revise their power plans and their renewable energy plans, we will be incorporating those into our forecast. So our fall forecast may look a little bit different from this. Moving to the United States, there will be a slowdown in growth, and this is due to the policy and trade concerns that I mentioned, but also due to projects that had previously qualified for policy incentives that were awarded a lower level. 2020 saw the highest level, particularly for wind projects, and then led to a record year of wind installations. But the lower the incentive leads to lower capacity deployment, as we are seeing this past year and as we anticipate through 2022 and 2023. Moving across the ocean to India, it's going to be a major driver of growth due to previously commissioned projects physically connecting to the grid. They had a tough COVID year in 2020, seeing lower than expected renewable energy additions. However, they rebounded strongly in 2021, and we anticipate that growth to continue this year and next. Latin America is expected also be a strong market for growth, again, due to the distributed PV market in Brazil. Something else that we are monitoring in the Brazilian market is that there are two methods to bring on large scale power. The first is an auction program through the federal government. The second are bilateral agreements. These are a little bit like these are corporate PPAs between developers and corporations for the sale and purchase of that power, which is actually becoming a major driver of large scale both PV and wind additions in the market. So as more contracts are signed, as more projects are developed by these means, the higher we are going to see renewable additions in Latin America. The Middle East and Africa region will also see strong additions. This is due to wind and solar PV projects coming online, as well as large-scale hydropower being commissioned. Finally, there are other countries that make up a good portion of our forecast as well. A country like Australia, which has seen strong historical growth due to strong historical distributed PV. We anticipate markets like those to continue to grow and make up a substantial portion of our forecast. So as I mentioned very briefly as we were discussing which technologies were driving these capacity additions, I touched very briefly upon offshore wind and a diversification of capacity in markets. So there was an interesting development within the renewable market this past year as China surpassed Europe for the most installed offshore wind capacity. Now, pardon the pun, but Europe has traditionally been a powerhouse for offshore wind. So China surpassing them is a very interesting moment within renewable energy, the renewable energy market, because it's leading to a broader trend of diversification, which we have new markets emerging and bringing on more and more capacity. Now you can see this a little bit in 2022 and 2023, where we have some markets in ASEAN bringing on offshore wind. Same with the United States. But if we look further and beyond 2023, towards 2030, towards 2050, we are actually going to see even more increased shares from new markets, such as the ASEAN region or the United States, which is a goal of 30 gigawatts of offshore wind by 2030, or a brand new market like Brazil, which has a target of, I believe it's 12 gigawatts of offshore wind power by 2050. Another trend as we move away from some of the technologies, I want to get into more of the macro trends that we're seeing as a whole in the market. And in Renewables 2021, we discussed increasing commodities prices having an impact on the overall capital expenditure required for these renewable projects. This is very important because this actually started happening in late 2020 into 2021, and has actually been exacerbated by the inflationary environment that we've seen this past year. Now, as we talk about commodities, we're talking about commodities such as polysilicon, which is incredibly, obviously very important for solar PV, or aluminum and steel, which can impact both solar PV and the wind market. So those are the commodities, but then also logistics costs, such as increased freight costs that we've been seeing around the world. Now, these increased costs across the board have actually reversed the downward trend of installation costs for solar PV and wind that we had seen in the past decade. While we expect a slight moderation in 2023, it is something that we really need to keep an eye on, that we are monitoring constantly, because this will have an impact on all markets moving forward. So as we go into 2022 and 2023, we want to make sure that we are factoring in these high commodity prices, while still understanding that solar PV and wind remain competitive against traditional fossil fuels and spot market prices, especially in the high energy price environment. Now, I want to highlight this point, because I do want to say and note that we have seen higher auction prices, particularly in markets such as in Europe and Brazil, which just closed an auction with prices that were 50% higher than those held last year. However, as mentioned, these auction prices, these corporate PPA prices, even though they're higher, they are still more competitive than fossil fuel prices, or remain competitive against fossil fuel prices, and are very competitive with spot market pricing, especially with what we are seeing in Europe. So I want to highlight the years that we are discussing in terms of this high commodity price. And you can see, yes, we are seeing some high auction prices. However, they remain well below the spot market pricing that we are seeing on a daily basis, a quarterly basis within these markets. The left figure represents wind. The right figure represents solar PV. So as you can see, while we are seeing a shift up, we are still seeing these prices remain extremely competitive. So now I want to take a little bit of a focus on Africa. I'm going to structure this kind of like the presentation has been structured from the top. We'll talk about the technology additions and which technologies are driving this growth, discuss the countries that are driving this growth. Then we'll discuss solar PV and wind before moving into biofuels. So a trend that we've been seeing over the last few years is something that remains. It's that solar PV is becoming an increasingly important technology, an increasing driver of growth for renewable capacity additions in sub-Saharan Africa. Now, as we can see from 2018 to 2020, hydropower led the bulk of the additions, followed by solar PV and wind. But as we look in 2021 through 2023, our forecast period, we can see that actually solar PV has a higher share of additions than large-scale hydropower does. This is very important, especially as large-scale hydro projects continue to be commissioned. There will need to be a technology that will take over from some of those, to take over for those renewable capacity additions. And we're seeing solar PV really take up that mantle. This is also followed by wind power, albeit at a much lower rate. Geothermal also plays a very important role in the capacity additions in sub-Saharan Africa, as the region has a lot of potential, particularly Kenya, which had a plant come on, I believe it was 87 megawatts. It might have been a little bit higher, come online this year or in final testing this year, with additional exploration and development in markets like Ethiopia and Tanzania. So moving away from the technologies that are driving this expansion, let's talk about the countries that are driving this expansion. The first is South Africa, and this is through a combination of auctions and private procurement. I'll get a little bit into what private procurement means, because it means on my next slide when we discuss solar PV. But we have auctions in South Africa. They've held 2 in the past 2 years, with the third scheduled for this year. The risk mitigation auction, which was held, I believe, at the end of 2020, the IPP auction held in 2021, with an additional IPP auction held in 2022, being held in 2022. Now, these are auctioning gigawatts of solar PV and wind, which are allowing for substantial additions within that country. Following South Africa is Ethiopia, with the Renaissance Dam starting commissioning this year, and will continue to be commissioning, as well as solar PV added to that mix. Finally, we have Nigeria, which is adding a good amount of solar PV due to previously signed PPAs, and Kenya and Tanzania, which are going to be seeing growth from PV and wind due to PPAs via a FIT policy or through negotiation with governments. Let's discuss solar PV a little bit. And as mentioned, auctions are a major driver of PV additions within the region. As we can see, the country, the region is adding, let's roughly say 500 megawatts a year historically, with a very strong year in 2020. And this is in spite of COVID-19. Now, one of the reasons for such a strong year is that South Africa had auction projects connected to the grid. So while we see a little bit of a decrease in 2021, that's because auction projects connected, and we see a few more connecting this year, but that's why we see such a spike in 2020. Moving forward, we see that South Africa continues to be a driver of growth, as well as through those auctions that I mentioned, along with municipal procurement, which are municipalities going out and procuring issuing RFPs for developers to develop solar PV or wind projects, as well as what I call private development. And this is 2 types of projects. It's one, a company going out and releasing an RFP for the design, build, and operate, potentially, of a solar PV system to power operations, or the lift of the NERSA licensing cap for solar PV installations from 1 megawatt to 100 megawatt. So we may see more private investment in solar PV, specifically in South Africa, due to these new factors. There are also other countries that are having large projects come online through a variety of mechanisms, including PPAs via FIT policy in Kenya, tenders in Ethiopia, or development bank programs that we've been seeing in countries like Tanzania. We also see development-backed projects in Cote d'Ivoire, Senegal, and Togo, which will add additional development to the region. Now, there are some risks associated with solar PV development. The first is financial, such as off-taker risks. There are certain programs that are helping mitigate some of that off-taker risk, such as a European bank, a development bank program that guaranteed off-taker power, as well as governments backing, additional government backing for these projects. The second are land risks. We've seen historically that companies have been awarded capacity in tenders, but then would need to go out and procure the land themselves, which has led to project delays or project cancellations. What we've seen actually recently, a very creative way to help mitigate that land risk is actually including land in the tender. So it allows developers to be able to, when they are awarded that tender, they get the land as well, which takes away that land development risk. Moving into wind, we can see that policy mechanisms that provide firm remuneration really drive expansion. So you can see historically that there are uneven additions, and the additions again are kind of going back to policies that have provided these firm remuneration. 2016, 2017, 2020, and 2021 and 22 in South Africa are very good examples. 2016 and 2017 were the preceding round of the Renewable IPP auctions in South Africa that awarded and had signed PPAs for these projects. 2021 and 2022 are the remaining projects in the most recent round of the auction capacity coming online. Whereas PPAs signed directly with the utility or government allow for that firm power pricing that allows these developers to move forward and build these projects. These projects tend to be large, and their infrastructure requirements tend to be quite large as well. So as a result, infrastructure availability can be a challenge. This is having a transmission line needing to be built to be able to backhaul that power, being built in line at the same time as that wind development. And we've seen delays of up to a year while projects that have completed construction wait for that transmission line to be developed. In addition, intense capital requirements, because these are such large projects, can lead to some project risk, and also the land constraints as well. These are large projects with a large footprint. So the land constraints that we see in solar are also seen in wind. So that concludes the electricity portion of this presentation. I would look forward to your questions. I'm going to move into biofuels very quickly before we go into your questions. I'm going to take a sip of water very quickly, take a brief pause here. Before we move into biofuels. So the renewable energy market team, we track electricity, and then we also track biofuels as well. So much like with electricity, let's take a look at where we came from and where we are at now. 2018 and 2019 saw strong 8% growth year over year, and we anticipated that growth to continue into 2020. However, COVID happened, and we saw a major dip. And now this is due to reductions in gasoline and diesel demand due to COVID-19 restrictions. It's important to note that biofuels are blended with gasoline and diesel. So the less demand you have for gasoline and diesel, which means the less biofuels you're going to have. And I apologize, I'm going to be saying this point a lot moving forward. So I don't mean to sound like a broken record, but I just want to make sure that the less demand for traditional fuels means less blending, which can mean less biofuels. The good news is that in 2021, we actually saw a major bounce back as these restrictions decreased and were lifted. We saw more demand, thus more blending. Moving into 2022, we also see growth. However, this is at a much slower rate than we have seen in 2021, and then also a much slower rate than we have seen historically. The historical average of year over year is about 7%, and we're seeing only a 5% increase this year. Now let's go into details of the fuels that we track: ethanol, renewable diesel, and biodiesel. Starting with ethanol, it's leading each fuel with the most amount of growth at 6% from 2021, and this is due to different factors in each region. The U.S., its return of gasoline demand, that's more blending. In Brazil, it's actually very interesting. There's actually a decline in gasoline demand, however, due to high prices. However, many consumers in that market have flex fuel vehicles, which allow them to fuel with gasoline or ethanol. So they can pick a price, they can pick their fuel based on price. So as a result of the high gasoline prices, there is more demand for ethanol, as ethanol prices tend to be less expensive in that market. Europe, a return of gasoline demand, thus more blending. And then finally, the APAC region is mostly due to India, due to increased gas demand, and then also blending requirements. Looking at renewable diesel, this is mostly in Europe and the United States for a couple of reasons. The first are the characteristics of the fuel, they have low greenhouse gas emissions, and this is due to some policies such as California's low carbon fuel standard, California being one of the most major markets in the United States, pushing up the demand for diesel. The second reason is that it can be produced using waste. The third is that it can be blended at a high rate. So this is actually good for some policies that are in place, such as that low carbon fuel standard in California, or federal blending credits in the United States. And as due to those, we're seeing increased demand. As a result, we're actually seeing more investment in renewable diesel infrastructure. So there are more places where people can actually go and physically get renewable diesel, which is also leading to an increase in demand. Moving on to biodiesel, we're seeing a decline in Brazil. This is due to a decline in demand because there was a pause on blending requirements due to high prices for feedstocks and fuels in the United States. But this is the opposite reason. The opposite reason for increases in the United States and APAC is because there has been no policy change. So we're seeing an increase in biodiesel due to policy status quo in those markets, where we're seeing a decline in biodiesel in Brazil due to a policy change. Now, much like electricity, things have changed since December. And actually, January, we ended up doing a forecast update to update policies since December. And what we saw in January were these new policies and demand increases actually substantially higher than what we had published in December. However, since December, we have actually seen a 20% decline in growth projections in 2022 across all regions, the rest of in Asia Pacific, Europe, Brazil, North America, and other regions around the world. And this is due to a few different reasons. The first is decline in overall oil demand. In fact, the IEA forecast from April revised down oil demand 1.2% in 2022. And again, it goes back to lower demand for gasoline, lower demand for biofuels. The second are increased feedstock prices, which started last year, and feed prices have continued to increase this year, with those feedstock prices being up 20 to 30% since January. Now, this brings into play the differential between biofuels and gasoline and diesel that are being blended. And some governments are potentially delaying or reducing the requirements, those blending requirements, which is actually going to end up reducing the overall growth of biofuels as we move forward. But as we mentioned, we will still be seeing some growth in 2023, albeit at a slower rate than historically seen. Moving forward, and as we look towards our forecast that we'll be publishing in the fall, we are tracking five forces that are going to be guiding and really influencing our forecast. The first is transportation demand. Continued high oil prices and slower GDP growth can bring down transportation demand and thus biofuel demand, as we will have less blending. The second are feedstock prices. And 10 governments are considering reducing or have reduced blending requirements because of these high biofuel prices. Actually, only the United States has considered increasing this blending requirement actually to bring down the cost of gasoline. So I'll show you what I mean here very, very quickly. This is plotting US gasoline, European gasoline against US ethanol and European ethanol prices. And this price per liter is not the price at the pump. This is without taxes. So this is more of a wholesale price. So this is not what consumers would see. So as you can see, actually, US ethanol prices are lower than gasoline prices, hence that blending. So you could see a price reduction in gasoline due to that 15% blending possibility over the summer. We look at Europe, we're actually seeing ethanol prices are tracking a little bit higher, which is leading to less policy change. Looking at biodiesel, we can see an even greater diversion between US diesel and biodiesel prices. And you can see it as well in Europe, unlike what we're seeing in gasoline. So some governments are actually responding to this by reducing requirements. Finland has actually reduced their requirements to help reduce costs of biodiesel. So as a result, if these policies are changed, we're going to be seeing potentially less biofuel demand. The third is energy security. This is at the top of minds across governments across the world. Biofuels account for 2% of oil demand globally, and reducing biofuels would mean a reduction, any reduction in biofuels would mean an increase of another resource such as oil. The fourth are greenhouse gas emissions. Biofuels are an essential component to greenhouse gas reduction strategies, especially in a strategy towards net zero. And in fact, Finland, which reduced their requirements in the short term with an eye towards the longer term, have actually increased their renewable fuel requirements beginning in later years. So those types of policies will end up helping short-term pricing, but potentially boost long-term demand. And finally, food security. Germany and Belgium are considering limiting crop-based biofuels in the name of food security, pardon me. And if food prices continue to be at their elevated levels, as we have seen, there could be more discussions across more markets, and that's something we are keeping an eye on. So these five forces are the primary factors, that we will be taking into account, as we move forward to our fall update. And with that, I want to thank you all for hearing my presentation today. I look forward to your questions. I'm going to stop sharing my screen now. But thank you again, everyone. I look forward to hearing your questions. And again, as the slide says, any questions, please contact us. And I hope you enjoyed it. Thank you very much.
Thank you, Trevor, for that great presentation. I think we'll just give it a second for some additional questions to come. Okay, so we have a couple of questions. The first one, what methods to distribute solar PV in the beneficiary?
Yeah, so I mentioned this in the presentation, discussing types of policies that would impact distributed solar PV. And there are two main policies that we've seen. There are feed-in tariffs, which allow a consumer business to be able to install a system on their roof, and which gets them a fixed price for the energy that is given back to the grid. Pardon me. The second is net metering. Net metering is a program that allows customers to be able to self-consume, and then anything that is pushed back to the grid would be either reduced in one of way. There's a volumetric way, which reduce their kilowatt hour consumption 1-to-1. So for every kilowatt hour produced back to the grid, their consumption would be reduced 1-to-1. And there's also a monetary piece where they would get monetarily compensated for that energy produced. It would be taken off of their bill or given as a credit.
Great, thank you, Trevor. I think we have a second one that reads, what is the range of Africa for the renewable energy capacity forecasted in the world's century?
Yep. So it's a very good question. Unfortunately, I don't have those numbers in front of me right now. I apologize. However, we will be releasing an Africa Energy Outlook within the coming months, and that will discuss those ranges. So please keep an eye out for that publication.
Thank you, Trevor. And we will make sure to invite everyone to the launch of the Africa Energy Outlook that will have that information. We have 2 additional questions in the Q&A. Let's take one by one. Do regional power markets have an impact on renewable energy growth? Let's start.
It's a very, very good question. And I think that, yes, they can. I mean, you can see it in some of the interconnected grids that we are seeing throughout the world allow for the development of renewables in areas where they're most likely to produce, such as areas of higher solar irradiance or areas of high wind growth. I'm going to use an example from the United States because it's a national market that's broken into different regional segments. However, there is the opportunity, and it is a lot, you can trade between those regional segments. So there's a lot of wind in the Midwest, there's a lot of wind in Texas, but the Midwest interconnection is allowed to interact with the Western power pool, or as well as some of the Eastern United States regions. So while there may not be enough land availability, in like the East Coast of the United States, they were able to work with different markets to be able to import some of that solar power, import some of that wind into those markets. That has seen a higher share of renewables penetration across the grid. And you can see that in Europe as well. The interconnection between multiple countries has allowed for development through renewables development throughout the region. Again, areas of high wind growth, areas of high solar irradiance allow for the, I'm going to say, shipping power between countries, but it allows you to build in an area, but then benefit another area. So it's a way that we've been able to see more development in areas that are best placed for that development, but then still see benefit across entire regions.
Thank you, Trevor. I guess in a nutshell, it's a way to counter that intermittencies of those technologies. Okay, and the 4th question, you mentioned that including land in tendering helps in mitigating land risk. Which countries have implemented this mechanism? Yep.
The most recent, I believe, has been Ethiopia. And one of their most recent tenders, they included land within their tender. So again, when we talk about land risks, there have been a couple examples of projects falling through because they unfortunately could not secure land required for the project. But by including land eliminates this risk and then potentially also allows for planning of needed high voltage transmission if required, especially again, as we mentioned, for wind projects. So it's an extra step that is removed from the development process that allows development to move forward, especially after a tender has been awarded, so we can move more quickly from the award to the build phase.
Yes, and I would just add that it also adds some predictability, especially when it's large portions of land and there may be some populations that we need to reallocate. So it's a really important aspect. Sorry, I muted myself. A very important aspect of risk mitigation for those projects. I think we've answered all of the questions that we received. Maybe we can give it one more minute for any last minute question that would be most welcome. If not, we will start wrapping up soon. Looks like there are no more questions. So I think we can start wrapping up. Thank you everyone for joining, for your questions. We hope that you found this very interesting and we look forward to seeing you on the next one. We will announce soon the date and the topic. We're very happy to have you join us today. I don't know, Trevor, if you want to say any last words.
I just want to thank everyone for joining us today. I look forward to continued dialogue and enjoy your afternoons. Thank you so much.
Thank you. Goodbye.